In today's video, I'm going to show you two simple trend lines that I use to help me avoid bad trades. A lot of the losses that you're taking right now can be avoided just by understanding how to use these two simple trend lines. What's up, guys? Welcome back to the channel. For those of you who are new, my name is Austin Silver. I appreciate you being here. I appreciate you checking out my channel. Do me a favor. Make sure you hit the red subscribe button, join the family so you don't miss any of the trading videos that I'm putting out for you and the rest of the trading community. Now, today's video is going to be about divergence. I've spoken to you about this before in a previous video, but today I'm going to show you a live example this morning of a trade that almost induced me to go short here on GBP/AUD. But because I'm able to use just two simple trend lines to help identify divergence, I was able to say, you know what? This isn't a great setup yet. Let me wait and see if it presents later. But this isn't right for me right now. So, taking a look at the 15-minute time frame here, you can see overnight from the start of the week, because we're talking here on Monday, you can see top corner, it's Monday the 23rd of September. From the start of the week, which was last night, Sunday night, GBP/AUD, all the GBP pairs have been moving lower. All the Euro pairs were actually pushed down overnight at about 4:30 because of some PMI news that was negative, way lower than forecast. So you have GBP pairs moving lower, Euro pairs getting pushed lower by news. So the short bias is there. You're looking to potentially take these short. On the surface here, before I pull up the TDI, you can see that the EMAs here are not in what I call perfect trend. Here, the 50 EMA is above the 200 white EMA here, which would tell me that in that situation, you'd actually be long biased. Now, of course, these are higher time frame, higher term, higher period EMAs, so they take longer each one to change trend versus, the red and yellow, the 8 and 21 EMAs. They're going to change a lot more frequently because they're shorter periods. Make sense? So as we're looking at this, we're building that short bias. We then want to pull up the TDI to confirm or deny the direction. Just disregard my purple lines for now because I'm going to show you on the shorter time frames, particularly what I was looking at. But as you can see, the TDI really confirmed the direction for the day. You were short bias coming in because of the overnight movement, and the TDI dropping into the sell zone, moving lower, RSI moving lower, tells me that the short bias is strong. If we go into the time frames that I'm looking to trade, which starts at about 5:30, 5:45 in the morning and moves through till about 10, 11 o'clock in the morning, New York time. That's when I'm looking to trade. You can see this pair really just kind of moving sideways. Now, of course, we're seeing it paint live right now, but from about 3:45 on, it really hasn't made a new low. To the point where, if you've seen my support and resistance video, you know that I would actually consider this a zone right here. So we now have this support zone set at the bottom. So as the morning progresses and I'm looking to see if I can find a trade, I finally get a breakout here for a new low of day. So this is, you would think, a strong signal that we're gonna move lower right now. This breakout at 6:15, coming off the 21 EMA, breaking through the 8 EMA, that you would think, because it's a new low of day, might signal to us that we're gonna see the push lower. But I'm smarter than that. I've been around these trades longer than that, and I know you need more confirmations than to just jump in right there. So I'll take it to the 5-minute chart. And as you can see on the 5-minute, we actually were able to identify divergence. The two simple lines that I want you to pay attention to are the purple lines that I have drawn here. And I'm actually going to circle the reaction points that I used because I really want you to understand where this is coming from. So where I start is on the RSI low, and as you can see, it was actually set here when it was oversold. I start at the RSI low, step one. Step two, I want to find the price action low, which up until this push down at 7 a.m., so again, looking at it before that, the price action low was set here at 4 o'clock and then tested again at 4:40. So at that point, I now have my reaction points set. Here at price action low and back here at the RSI low. So then what I want to do is take my trend lines on the RSI, starting here at the RSI low, and match that point to the price action low right here at 440 on the RSI. So I now have a rising trend line on the RSI. Then you go above to the candles and you draw the same line. I have it in purple again. And you can see on price action, we're actually moving lower. So what does that tell us? With RSI rising and price action moving lower, it tells us that you look at the higher time frames for the directional bias, but until these two trend lines, it has to be on both of them, until they're broken, I'm not going to trade this in the direction that the price action is trying to get me to trade it. I'm going to rely on the direction the RSI is telling me to follow it. And what I'm saying by that is, in a situation like this, when I'm looking to go short, you see I have the short marker set here when I wanted to take that breakout for the new low of day at 6:15. But because I came to the shorter time frames and I found this divergence, I said, let me wait on it. Let me just see what happens. And let's see if the divergence breaks and gives me an entry maybe later in the day. And even here, you can see it's looking like it still wants to come lower, but still not a clean entry. By waiting, by not jumping in at 6:15, I avoided this pullback that could have potentially stopped me out. After that pullback at 6:50 to 6:55, we had a huge push down here. You see in this 5-minute bar, it goes right to the divergence line and bounces right off it. And I was in the VIP chat telling everybody, guys, don't go short on this 5-minute formation because it is hitting the divergence line. It could bounce right off it just like it has back here and back here. And what does it do? It comes right back off that divergence line after it tried to fake you out short again. It bounced and either got people to pull their stops, or even here it did stop people out. So we want to keep in mind the overall picture of this. The market makers, whoever you think is controlling the market, I'm not here to talk about that. Under the computer algorithms, I believe, understand how trader psychology works. They're built to move against the herd mentality. And here, after such a big move down overnight, they know that they've got short orders trapped here, right? So to pull back here and stop some of them out saves them money. It makes the broker money, and then it moves against in the overall direction that the TDI says that the movement from last night tells us, right? It ends up coming down now. But on the surface, the most important thing here, the title of this video is using these two simple lines. I want you to understand that this morning I saved myself money. And even here now as it's coming lower, I could have been looking for shorts, but the setup wasn't there. So again, saving myself money. The thing with these divergence lines, this is what you have to keep in mind. I've explained to you how to use the RSI reaction points first and then match them on price action. But the thing you need to keep in mind here is that you cannot trade it short just because the RSI is under the purple trend line here. You want the RSI to break divergence and price action to break divergence. That had not happened here. That's why I didn't go short here at 7 o'clock. Now here, even still this morning, I'm not convinced that we break past this low at 183.48. I just don't know if we do because of the divergence. We could. The higher time frames tell us the short bias is there, so we could move lower. But it's about probabilities, and a big factor of shifting probabilities in your favor is the timing. Knowing when to get in. You could pick the direction very easily. It's 50-50 shot, right? You could almost guess. But knowing when to get in is very difficult. That's where people are losing their money with trading. How many times have you or you know someone said, I had the direction pegged, it stopped me out, and then it kept moving? Right. I guarantee you there was probably divergence in that setup, and if you knew how to identify it, you could have avoided it. So here, learn from me. You don't need to even come from to the 5-minute. You could go to the 15-minute, and I wanted to show you this last. If I erase everything now, and we do our replay mode, which you guys have seen me do before, I was actually spotting divergence here on the 15-minute as well, and I'll show you. So I just used the replay tool to rewind here down to about 5:45, like I said when I got on the chart this morning. Again, just using RSI low of today, right here, you see that's at 245. Connect that to price action low. You see that purple line rising right here on the RSI? When I match that up, what do you see? Divergence, price action falling, RSI rising. It's small, absolutely it's small. You've seen it over 2 days, and that's divergence. They're both divergence, just to a different extent. You cannot ignore this, where you see price action falling, but the RSI is rising. You cannot go short into that, and if you don't pay attention for it, you're gonna get trapped like I could have this morning. But like I said, I've been doing this for almost 6 years now. I've seen a lot of these patterns, and I actually am testing this stuff to find reversal entries using divergence for the advanced guys. So being able to spot this keeps money in your pocket, and that's really important. Finding winning ideas is very simple. I really mean that. And it's almost a gamble because you could win, if you just happen to guess in the right direction. But understanding how to avoid certain setups, how to keep money in your pocket, is what separates those gamblers from the professional traders. So if you're really taking this seriously, if you're really trying to go full time, if you're trying to grow your trading account, if you're trying to compound your wins and increase your lot size, you better bet your ass that you need to understand how to identify divergence, or what's going to happen is you're going to win Monday, Tuesday, Wednesday, Thursday, and by not paying attention for a divergence on a Friday, you're going to get chopped around and you might give some of those wins back. And I'm hoping that after watching this video, you can now use an RSI with your price action, or if you even want to test it with another indicator, you could identify divergence with a MACD. There's any indicator you can use to identify that divergence. You will now use it to help keep you safe. So I hope you learned something in today's video. If you enjoyed it, like I said at the beginning, do me a favor, join the family, hit the red subscribe button, and give this video a big thumbs up. Drop a comment, let me know you watched all the way through. And if you have any questions about the Divergence, about how to draw it, shoot me an email. My email is thesilverinvestmentgroup@gmail.com. It's in the link in the description to this video as well. I'm here to help you guys in any way that I can, but I think this is very clear. You see the 5-minute, you see the rising RSI, and you can see here now, it looks like it's coming higher. So I think understanding this, understanding how to draw these two simple trend lines is going to save you a lot of money. So good luck. Let me know if you need help with it. I'm always here for you, and I'll see you guys in the next video.